drastically low. And you see we're forecasted to be well below that. So now we'll get into beans. It's basically the same charts. This goes and shows you where beans, so we got to keep in mind that the number on beans is 78 or 76, 76.6, I think is my memory, right? And you see beans have always gone down from this report. So yellow is the final result. The only year was 2008 again, where farmers decided just to seed a bunch more crop, because if you remember, corn was down a little bit that year. But all in all, beans have always been lower than what was projected in this report. So this is March 31st. Oh boy. Whoops. And as I find my slide again, okay, so this blue line is March 31st report. Yellow line is what actually gets seeded. So as you see, blue is higher than the yellow quite a bit. So that may impact us through weather growing this spring and summer, and it may affect us as to how many acres of canola we actually get in the ground, and how aggressive traders will be on the soybean front. Right now it's trading at 14 bucks. How much higher can it go? That's kind of anybody's guess. It could go to $14.50, maybe $15. Now soybean demand by quarter. This is the first quarter. You got to remember it's October through to December. This is second quarter, and third quarter will be coming in. It'll be likely higher. Again, even though South America had a big bean crop, their quality is really poor. They're still getting more rain down there. China doesn't want to buy poor quality beans. Bring in the fact of what I showed you here with the US dollar. It's just cheaper for China to bring it where they know they can get the product from. As I said, I'm not going to spend much time on beans, but I will show just pretty much the same slides as what I showed on corn. Here's their stocks to use, and the crops we're talking about. Anytime beans get below, let me get my highlighter here. Anytime beans get below basically the 200 level, the bulls are going to be in the market in the States. As you see, beans, it's almost like, well, I shouldn't say almost. Beans haven't really followed what a lot of the other crops are. In the last 10 years, beans have come maybe from 25 bushels an acre up to 43. Corn has gone from basically on an average of 90 bushels an acre up to what you see 160. So they haven't been tinkering with the genetics as much in beans, so their yields are a little bit lower. Again, everything is derived from this number and this number in order to get you this number. All these are going to stay the same. It's just like I always talk about once I get into canola later in the spring here as to our crushings, what our expected exports are. Exports are going to be up likely because Japan's going to be buying quite a bit. And yeah, that's basically the beans in a nutshell. Now we get into, that's what the USDA says is going to be seeded. Now we're going to have to get into, okay, what is the likelihood of that being seeded? And here's a little map of what I'm talking about. In this area right here this is what they call the Golden Triangle, pretty much right down through here into Montana, into the Dakotas. That's where red spring wheat is seeded. You see it's very high and above average moisture. Well, I mean, you can pretty much carry this line right on into Canada, and that's exactly what we're in Canada. Their acres for spring wheat are likely going to be down, but wheat needs to be down. When you get into here, into this area right here, this is Kansas right here. Here's Oklahoma, and here's northern Texas. This is where all the winter wheat is grown. I shouldn't say all. I hate you saying all, but let's just say all, most of it. You see it's below average. That's where a lot of the winter kill has happened. Darren Newsom from DTN answered my question this morning as to winter kill. He said he was down there, figures that they're going to lose at least 2 million acres off of their 41 million acres of winter wheat due to winter kill. But he figures due to insurance, farmers may not reseed it. They may actually just double crop it, take what they can take, and in late June, beginning July, throw real early growing season corn in. So there's a little tidbit as to how the acres might change. This is where a lot of the corn is growing in this area. Interesting to note, it isn't on the USDA report, but it is on my report that I put on the website as to the actual USDA report. And they say where a big increase in the corn acres are coming from. 4 million more acres aren't coming from the corn growing area. They're coming from the southern area in here. And why that's important is because yields are going to be definitely lower. Up here they grow anywhere from 200 to 220 bushels an acre, and down here they grow anywhere from 100 to 120 bushels an acre, sometimes even less. So that being said, it'd be like us saying, okay, southern Saskatchewan is putting in 5 million more acres than Alberta, and expecting this area in here to still grow an average of 39 bushels an acre for canola. I mean, that's absurd, because you got to remember, when our averages are up in the 40s to 50s, this part of Canada, their averages, I mean, obviously are down around 20 to 25. So it's the same idea in the corn. Even though there's 4 million more acres going in, where is it going in? It's going into the lower producing states. And that could be important going forward. This kind of got garbled while I was doing it, and I didn't have much time to correct it. But what this is, and I wish I didn't miss the bottom off of here, is this is what's different from 2008 to this year. So let's just say this is, I'm going to attempt to write with this. This is 08, this is 11. And what this is this is when the price spiked up in corn in 2008. This blue line represents non-commercial funds. So pretend the commercial fund is, commercial is Viterra, Bunge, somebody who has an interest in buying the product for crushing or exporting. Non-commercial is this blue line. And what non-commercials are, they're what I always call the spec traders, the hedge funds. This is how deep they were in the market. So that price shot up on corn for no reason at all, because it wasn't speculators driving the price in 2008. It was just basically the burst before, or the bubble before the burst, and that's what happened in 2008, and that's why we got caught in this down, deep, sloping line right here. That when corn came back down, you see corn goes back up when commercial funds start getting into the market again, or non-commercial funds, and they're holding contracts. What this is it shows how many long contracts they are. So a long contract right now would be December corn. That's what they'll be holding on to, and they can roll out of that position. Maybe by September they'll roll out into next year if they still want to stay long in the market. So as you see, corn was bullish all the way back from basically October, and if I had the bottom of the chart on here, this line right here is October of 2008, and you see how long they were in the market. And then just what I want to show you with my pen is that steep drop right here in the blue line. And what that is that's the commercial funds getting out of their long positions, and that's what happened in the last 6 weeks. Obviously, today's chart isn't on here. Thought is that this looks exactly like what this looked like back here. Is they got too long in the market, sold off, and then they're going to build their positions again. So school of thought is that this blue line, if I was to show you the same chart 3 months from now, which I probably will be back up. They'll be building their long positions again in the market. Reason that's important, because now when I go back to the DTN and show you that corn's trading at 30 cents a bushel, lock limit up, $6.95. 3 months from now, I might be talking $7.50 to $8. But going back to this, what this does create is, let's pretend we just erase the last 6 weeks when they were getting out of the market. I know for myself and probably for some of you, it was a lot of head shaking, sleepless nights, wondering what the heck is going on. Because like I said, sometimes you just can't explain what's going on in the market, and that's exactly what was happening. One thing I can tell you, though, is if I was to bring up a corn chart, and this is basically a corn chart from the last 6 months. I'm just going to make it into a 3-month chart. So corn raced up, or not raced up, corn gradually built to 750, which I remember writing it was going to break 6, which it did in January. Then I said next stop is 750, which it touched just up to 745, so close enough for me, and then came down. Reason being, for traders to make any more money from 750, if you were to extend this up to $9, they aren't going to make any more money because there wouldn't be any more corn sold. So what happens is they get out of their positions in this area right here. You couple it with this area, they're getting out of their positions. Whoops, I go back to that. They got out of their positions, and corn drops down to 608. A bushel was the low on this day, and bang, pops right back up. Now, once you tack today's number on here, which isn't, it'll be right around this $7 range. So like I said, and I remember telling some of you, corn can go from $6 to $7.50 again, but it was very unlikely it was going to go from $7.50 to $9. $1.50 in a trader's pocket is $1.50. He doesn't care if it drops down to $5 and comes back to $6.50. He's making that $1.50, and they did, or they will. They're back up $1 already. Now, why that's important is because if they get back into this long position, you can pretty much follow the red line all the way up. And that's where I start talking the $7.50 to $8 range, because it is totally possible. Let me just get out here. Because the US dollar, I think this is going to go break a 6-month low, and I think we're going to see it could be under 75 into the 74s, and then that makes it really cheap, especially if inflation starts to hit. Consumer confidence on Tuesday was released and said that it's at a 3-month low, which isn't good. People aren't spending money. The economy is slower to come back. So last slide, just a little bit of conclusion of today's report. Final acreage numbers. They come in near the what everybody was thinking they were going to be, but like I said, it was more the stocks report as to how much is going to carry them through the summer. We're going to be very volatile. You're going to see numbers from this area go up and down. I anticipate another big sell-off coming, and it could be the end of April. It could be the end of May. It just depends when traders want to pull their money out. There's going to be different things influencing the canola market coming up, as we all know by our weather. But I mean, anytime prices get high like this and there's that many spec funds in there, which I was just talking about, this blue line, there's a lot in the market, it can get very volatile, and it's going to continue throughout this summer. Once they start getting too much heat, not enough heat, maybe fertilizer prices are too high that farmers use a little bit less fertilizer on their corn, anything to hurt their yield and potential on corn, it's going to definitely drive the market swingy in one way or another. So one thing I didn't touch on much is the wheat. Wheat acres are larger than what they expected, but most are expecting those to come down with guys now with the prices changing and all the grains. Maybe, and I showed you how wet it was, maybe getting out of some of their wheat acres and putting it into something else. Wheat is really a dog in the market. Let me just show you the wheat here. It's back up only today because it's being dragged by everything else, by corn being locked limit up. It's back up into the 920, but it's going to take for wheat to get back up into the $10 to $10.50 range. I really think it's going to take something huge with a really late spring. And of course, if they get a really late spring in the part of the map I showed you, I don't think ours is going to be any earlier either. So right now, recommendation on wheat is we just ride it out and see if we can even start getting ours in a timely fashion, because we definitely don't want to be committed to